India's exports have been probably the only bright spot over the last 2 years when the economy has been in deep trouble due to the pandemic. In fact, exports have never been better than this ever. The data shows that for the first 11 months of calendar year 2021, there was about a 20% growth in India's exports, which was better than the previous best, which was 2019. But there is an underlying story to India's exports here. We always talked about India's exports being commodities, some gems and jewelry, raw materials, iron ore, and this and that. And India's exports were never a story that got talked of in glowing terms. But something seems to be changing, and that has to do with manufacturing. Hello and welcome to another episode of Panchamantra, our umbrella show on business and economics, which tells you and brings you all the answers and insights into a new, fresh topic in just 5 points. And that is by Neelkanth Mishra of Credit Suisse. Hi, Neelkanth, welcome back. Wonderful to have you back. This whole discussion about manufacturing, the talk in India was always about India has missed the manufacturing buzz. China has become the factory of the world. Asian countries have become, manufacturing powerhouses. And India's future probably is in services. That has been the general talk and perception. Do you think that is changing?
Hi, Rajesh. Thank you for having me again, and a pleasure being here. So you're absolutely right. I think a lot is changing. We have a lot of ground to cover, but there are early signs that we are now turning a corner. So the opportunity in services is still there. I think that's perhaps good for another episode of Panchamantra. But on manufacturing per se, a good measure of that is the numbers that you highlighted on exports. So our overall exports had stagnated at about $250 to $330 billion range for nearly a decade. But in the last year, we have done about $400 billion. This has, of course, been boosted by sharp increases in prices of some commodities like, say, steel and rice and chemicals. But the fact that our global share of goods exports is also at a record high shows that we are definitely gaining ground. It is still only 1.9%, but it is a record high, and we should be encouraged by that. Now, there is, of course, growth in exports of agricultural commodities and petrochemicals, etc., which are very low value add. But what is very encouraging is that the bulk of the improvement has actually come from manufactured goods. And these are also in sectors where the trend appears to be sustainable. So there are four which I would like to highlight. The first is electronics. This is by far the largest sector traded globally, and one where India has been nearly absent. We are still now at only about $16 billion, but this is double of what it was in 2018. And just for perspective, the government's target 4 years out is for 110 billion. So 16 going to almost $110 billion. But that seems a bit ambitious, I must be frank, but the underlying momentum is quite strong. Perhaps it's achievable, but I think at least a $50-60 billion number is possible 4 years out. The second category is specialty chemicals. So India in bulk chemicals, things like fertilizers, etc., it lacks scale because we don't have access to, say, potassium mines or crude oil. But in specialty chemicals, where the differentiation comes from good quality but low cost chemists and chemical engineers, we are gaining a lot of ground. So we've done more than $40 billion last year, and this number is rising very rapidly. The third sector is textiles and apparel, where again, we had been stuck despite all our historic strengths, right? So I was reading this book on how Indians had solved the problem of dyed cotton, which was very soft in the 17th century, and no one in the world could do all those things. Despite all those historic strengths, we have struggled at expanding it about 32, 33. But now, after a long time, we are seeing us break out. This is so far only because of yarns and fabrics, but the downstream garments, the apparel, that's still picking up. But I think the momentum seems quite strong, and talking to companies is very helpful. This is also being backed by domestic demand in manufacturing for manufactured goods. So there is also a fair bit of import substitution happening. So like in air conditioners. So the strength in manufacturing is also starting to show up in other parts. And in particular in sectors like autos, where the sector is likely to see significant disruption over the next decade, not just electric vehicles or the entry of new car manufacturers like Apple and Sony and Xiaomi. Now there are handset assemblers which are setting up factories for car assembly. So the whole industry is going to get disrupted. And for the Indian industry, which has been trying to get a foothold at a global level, our global share of value add is only about 3% in autos. This is, I think, a great opportunity, and we do have some very ambitious companies which are, I think, very eager to latch on. So the opportunity in these 3-4 sectors seems to be sustainable, and it suggests that there can be quite a bit of growth going forward.
Mm-hmm. Electronics exports from India sound so fabulous, Neelkanth, because for generations we have been used to products made in Japan, then made in China, made in Korea, Malaysia, but made in India electronic products sound such a fantastic development. But tell me, what is driving this overall surge in manufacturing? Not just electronics, of course, all the other sectors you mentioned.
So there are many important drivers, and which again suggests that some of this could be sustainable. The first is the China plus one, and this is not just geopolitical. I mean, the fact is that demographic pressures in China are quite intense. They have been shrinking, or their industrial workforce has been shrinking now for more than 5 years, and I think over the next decade it'll shrink even more. And therefore, anything that is labor intensive, cannot be automated, naturally has to shift out, and India is a good place to be. Plus, I think some diversification of supplies. So companies are starting to look for alternatives, and I think India is one of the major ones. Then there are measures taken by government. So like the production linked incentive schemes. Now this is actually quite innovative. So the government is telling companies that if you jump this high, basically you meet this production target, then I'll give you an incentive. And those incentives can be quite substantial. In some cases, 6 to 8% of revenues could be the incentive if you meet a certain target. If you don't meet the target, you don't get it. Now, this is very innovative. There has been very natural criticism for this being industrial policy coming back. Who are we to decide which sectors need the incentives? But from the perspective of production and growth, we can see there is actually very strong traction. In electronics, for example, we were already about a fifth to a fourth, so 20-25% of global handset assembly. But with the PLI schemes and several of the firms identified for these incentives are actually about to meet their targets for this year, and therefore will be eligible for incentives. And as those incentives get delivered, I think there will be even more interest in some of these schemes. And I think the government's target of being 2/3 of global handset assembly in say 5 years is perhaps a bit ambitious, but I think at least half, so a doubling of the numbers from where we are seems very possible. There has been some delay in the rollout of PLI schemes, so in major sectors like autos and apparel, but I think that again there was some redesign needed, but the momentum seems quite reasonable. There's a third element, and perhaps a second part of the same issue, which is the state government. So they have been very helpful. They are competing to attract manufacturers. Like the two-wheeler electric manufacturing. Apparently, the land came in the state of Tamil Nadu in like a week. Similarly, when one large handset component company wanted 500 acres of land, they got it within a week. Then they observed that there was no highway connectivity, and within a few weeks, work started on connecting the national highway to the factory. One example, which is very striking, is that when Tesla started its EV plant in China, there was a lot of wonder that it started within 9 months of groundbreaking, right? But this plant, this component plant, which eventually may employ 60,000 people, it actually is also going to have commercial production starting within 15 months of the project being envisaged. So there are some remarkable things happening in terms of responsiveness. State governments are giving various kinds of subsidies, are willing to take over skilling costs. The third factor is gaining scale. So in segments like specialty chemicals, the industry is maturing, right? So you start off with low capital, you try to solve the easy problems, small products, find a niche, you become very profitable, you start growing, and then you get the wherewithal to target the bigger products where you can take on, you can invest for a 10-year period, you can take on bigger projects. And many of these companies are now starting to reach that level. So versus only 6 companies in 2015-16, we now have 18 companies with market capitalization of over $1 billion. Some of that is clearly stock market froth as well, but the underlying growth in profits has been 20% CAGR for the industry over 10 years. So this is meant that the industry has scaled up. It can compete globally in the specific segments of specialty chemicals. These changes also have meaningful ecosystem effects. So like the component company I talked about, is setting up hundreds of CNC machines. These are machines which are required to cut metal in a certain way. So they're buying so many machines that their Japanese supplier is saying that, look, we'll start assembling our machines that you buy next to your plant, right? And so these are very classic ecosystem effects which are already starting to show up, and this is also quite fantastic. There are temporary issues. Well, I don't know if temporary or not, but there are other issues like the US banning Xinjiang cotton. So what that has meant is that the buyers are starting to look for alternatives outside of China, and then quite a bit, especially on the cotton side, are then coming to India. So all of these factors, I think, are contributing to what seems to be a pretty broad-based revival in manufacturing exports.
It's a remarkable revival, going by what you say, Neelkanth, especially the fact that India seems to be writing a manufacturing story, so to speak. And obviously, this has a huge spillover effect on the GDP growth, right? Because the contribution of manufacturing to GDP has been, nothing to really write home about.
Correct. It's actually suboptimal, and in fact, as you rightly said, it has actually been falling. So it was 16% of GDP in 2012, and just 13% last year. So which means that manufacturing was growing less than GDP, and for a country with at our levels of per capita GDP, that is clearly something which is undesirable. So our estimate is that just the growth in exports. So there is an import substitution angle. There is also growth that will support normal GDP growth, but exports is where you are catering to global demand, you are gaining share, and therefore we would consider it additive. So we think that exports, manufacturing exports, could add about 2.5% to GDP in the next 5 years, which is I think quite meaningful, which would be equivalent to adding 50 basis points. So now if you were growing at say 6.5% earlier, just because of these trends, you would be growing at 7% every year, which seems like a small number, but remember that GDP even today is $3 trillion. So 1% is $30 billion. So even 0.5% is actually quite a substantial number.
An equally important question, Neelkanth, is jobs, because we have been talking about the number of young people who are coming into the working population, and the fact that India needs to create more and more jobs. And this can only happen through manufacturing, because which other sector can absorb so many millions of young people who are growing up into working age adults? So, what does this mean for India's desire to create those millions of jobs?
Great question. The point is that while services, and especially like software exports, and exports of other services are, I think, very high value add, very sticky, and we have great strengths, and we should definitely focus on them. But in terms of numbers, they're just too small, right? If the IT sector is doing record hiring this year, they will be hiring 5 lakh people, right? But in a workforce which has 50 crore people, and where we are adding a crore every year, I think that's just too small, right? So I think the manufacturing jobs are very, very important. Estimating job creation is actually a very subjective process, because see, what we can measure and we should measure are the jobs on the assembly line. If you say set up a factory, but there are many downstream and upstream changes that happen as a result of that as well, right? So there will be jobs to ferry people to the factory. There will be jobs to take care of the people where they're living, they're catering, and so there are many ancillary jobs. So those multiplier effects I would leave open, and because sometimes they can be 2-3 times as well, because when new jobs come in, new income comes in, and that's why manufacturing exports are so important, because you're gaining global share. So you're feeding off of global demand. So the incomes you create then drive consumption, and that creates further jobs as well. But at a broad level, the sectors which will be most job intensive or labor intensive are electronics assembly and apparel and textiles. So $1 billion of apparel exports means 150,000 jobs, right? So just think about it. So if we just $4 billion of additional apparel exports, and we create more jobs for more people than the IT industry does. But the value, of course, is going to be lower. But if you have to absorb a very large number of people and slowly start taking them up the value chain, I think this is a very important number. The government's assessment of the electronics PLI is about 300,000 direct jobs and 900,000 indirect jobs. But remember that this is only for the PLI scheme. So there are 5 global companies and some local companies that have been selected for the PLI schemes. But there are now 30 EMS companies, electronic manufacturing services companies, which are assembling phones in India. This is another ecosystem effect, right? So what has happened is that if the best phones in India, in the world, Apple and Samsung are getting assembled in India, then everyone gets confidence that, look, if those phones can assemble, then we can do it as well. And so there are several non-PLI beneficiaries which are also starting to come in. So I think in total, this can, I think the job creation potential from this could be several million jobs actually.
And that sounds like a huge multiplier effect, Neelkanth. But like we always ask our fifth and final question in Pancha Mantra, the question about, is this enough? Are there challenges? What are the risks? Because it's not something you start doing during a pandemic and then suddenly drop it once the economy recovers. This needs to be sustained.
Oh, absolutely. And I think that, it's important to keep things in perspective. So it may be a record high, but our global share of manufacturing exports or total goods exports is actually still less than 2%. We did about 400 billion, 393 to be exact, but China does $3 trillion of goods exports, right? Their apparel exports are 7 to 8 times what we do. And this is after several years of lost share, which has all gone to Bangladesh and Vietnam. Their electronics exports are 40 to 50 times that of India. So our ambitions need to be much higher. We need to keep growing. So if we have to go from 2% to 10% over say even 15 years, which means that we have to beat global growth in exports by at least 12%. So if global growth in exports is 3 to 4%, we have to grow at 15-16%. And that's a growth that has to be sustained over 15 years to get to a global export share of 10%. And for that, you need many things. So you need not just 3-4 sectors that we just discussed, where there is some intervention, some natural growth, but you need many more such sectors. So you would need perhaps defense exports. You would need exports of furniture. If you would need exports of heavy equipment and machinery. So as capital goods requirements in India start going up, maybe companies will start manufacturing a lot more in India as well. It could be robotics, it could be electric vehicles. So there are a lot of these things that I think we will have to focus on. And as we also have to protect what we already have. So geopolitics and disruption. So for example, we discussed the auto chain, which, because we are not incumbents there, we are seeing that as an opportunity. But in many sectors we will be the incumbents, and we could get competed out. So both the companies as well as the government need to be very agile and adaptive to some of these growing trends and take advantage of them. We also need to address capacity bottlenecks before they emerge. So right now, of course, there's no dearth of people, but at some point, I think companies will have to go into what truly is the hinterland, right? So right now, everyone is focused on areas which are very close to the ports, but moving to where the demographic bulge is, I think will also become essential in say another 4-5 years if we need to keep growing at this level. We also need to tackle the infrastructure constraints. Right now, there is perhaps sufficient port capacity, but if our exports were to double or triple from here, all of those, I think, construction and that will start to happen. That will need to happen. We need to grow skills. This is not just for workers. So as business becomes more automated, so what is remarkable is that even labor-intensive steps like electronics manufacturing, what we are hearing from companies is that there is significant level of innovation. In fact, in electronics component manufacturing, everything is like Industry 4.0. So you're getting feedback. You're getting from every machine the productivity measures. And so as you design the next product, which could be just 1 year away, these are very fast-changing supply chains. You need to keep upskilling all the time, and I think all of these will require an ecosystem level enhancement. So you need colleges, polytechnics. The governments need to be agile about how to tax them, how to supervise them, how to not let the balance go too much in favor of business at the detriment of workers, without actually slowing down this whole momentum. So I think these are going to be challenges, but we should be encouraged that we are making the good steps, which should be bringing in more capital and more investment, both domestic and global.
Ambition, agility, infrastructure, skills, quite a few challenging areas, but the best insight we got at the beginning of the new year, Neelkanth, is that there is momentum in manufacturing and it is contributing to exports. And what better note than this to start the new year on? And in the run up to the budget, hopefully we will get to see some new policy measures which will help manufacturing in the budget also. Thank you so much, Neelkanth, for these insights. And I also want to thank our viewers for their very encouraging comments after our previous show. We are really touched by your comments and your encouragement, and we will look forward to you watching this and staying with us. Thank you so much. We will be back with another episode of Panchamantra very soon.